Cutting rates was like letting loose a gun on the markets by the Chinese central bank. New study also shows that Bitcoin loves liquidity and a huge bull run is about to happen. Some hedge fund managers say you should buy everything, but we talked about why you should be careful and never put your Bitcoin in the hands of state banks or big banks. Let's go. How are you all? This is Dante Cook with Bitcoin. Basically, making it easy for you to understand economy and markets. Let's get to the show for today. China is setting off the financial weapon. China's central bank agreed to lower interest rates by 50 basis points. They also lowered the amount of reserves that Chinese banks had to keep on hand and mortgage rates for homes. Also, they're giving the Stock Stability Fund an extra $113 billion to help stocks. So far, since the news came out, Chinese stocks have responded. The Chinese stock index is up over 4%. David Tepper, the owner of the Carolina Panthers, put all of his money on Bryce Young in the last draft 2 years ago. He is telling you to do the same thing with Chinese stocks. To be fair, I did more last night than they said a day or two ago on their Fed. I also did more last week. Are you talking about JD or Baidu or just Alibaba? Everything. PDB, one of the two Chinese ETFs. Everything. You know how we do futures with ETF, right? Everything. Listen, I think I said everything a long time ago in 2010. You would say everything. I remember everything you said. What was good, you were right, everything. Okay, most of the time, China's growing balance sheet is a great sign for Bitcoin. However, that's not just China's books. Bitcoin likes to get cash from anywhere it can. According to studies by Lynn Alden and Sam Callahan, Bitcoin has responded to global liquidity 83% of the time in any 12-month period since 2013. This type of asset has the strongest link to world liquidity of all types. Bitcoin takes in more global cash than any other currency. We've said this a lot of times. And quickly, since this recording, Bitcoin is up over 65,000, so it's reacting in the right way. The charts also show that it looks like we're about to break out of a huge consolidation phase. October, anyone? To show you why I think we should always be cautiously optimistic about Bitcoin in the context of the regular financial system, let me give you a few examples. Again, let's look at the news about the Chinese Stock Stability Fund. In this way, big players or non-banks will be able to set up accounts with the central bank. So people who aren't banks can put up collateral or stocks in exchange for something like a Chinese government bond. This bond can then be used as collateral in the Chinese markets. That's pretty much a swap, but with someone who isn't a bank. It has been tried before, and Matt Dines from Build and Nick Bhatia from the Bitcoin Layer say that each time it didn't work out well. John Law in Mississippi in the late 1600s to England and France in the early 1700s with the South Sea Bubble. There has never been a credit line from non-bank players to the central bank that worked to boost growth. They have all failed. Not only am I warning people to be careful when working with Chinese stocks, but other people are too. Bill Miller told us on Twitter to be careful, but also to remember that one of the best things about Bitcoin is that there is no counterparty risk. Country counterparty risk became very real for people who put money into Bitcoin miners in places where they could be taken in 21, 22, and 23. If you left your Bitcoin on an exchange like BlockFi or FTX, you learned about custodial counterparty risk in the real world. And I hope people don't have to learn the hard way with Coinbase, because they keep showing us lots of reasons why you shouldn't leave your Bitcoin on an exchange. Coincidentally, you can't buy Bitcoin or get your Bitcoin out of their site every time the price of Bitcoin goes up. Watch out for things. In a different part of the web, one of the biggest open source projects or platforms in the world, WordPress, which powers 63 million websites or 2 out of every 5 websites on the internet, became the first to ban WordPress engine. WordPress engine is a developer of themes, plugins, and other useful tools that run on top of the WordPress platform and has 1.5 million customers. That's how they banned them. These are some reasons. Why Bitcoin maxes keep beating the drum about self-custody and being truly in charge of your Bitcoin. Not only won't number go up technology, but also freedom go up technology. It's worth more than $1 trillion because of this. To everyone who says it's not worth anything. That brings me to today's interesting thought: why we shouldn't put our Bitcoin in state banks or big banks. If you remember from last week, there was a chance that the Bank of New York Mellon could get around the SAB 121 rules and hold Bitcoin for users. I didn't really give it much thought, but when I saw on Twitter that JP Morgan, Citibank, Morgan Stanley, Wells Fargo, and Bank of America are all trying out Bitcoin loans, it raised a lot of red flags for me. This is a bad sign for fractional reserve banks. Big banks will use fractional savings every time they have the chance. Caitlin Long said in a recent talk with Marty Bent that this is one of her fears and something that most Bitcoiners don't think about. She thinks that fractional reserve banking with Bitcoin will cause a big bank to fail. Bitcoin is a product that lowers prices. It's not an object that has yield built in. So if you're dealing in Bitcoin yield, that yield has to come from somewhere. You should find out where it's coming from and see if it's paying you enough for the risk. Bitcoin is the first thing they have ever seen like it. To use a term from Trace Mayer many years ago, this is the apex predator. It is the biggest thief in the world of money. They are going to have trouble at some point if they get stretched more than 1 to 1. They will definitely get exploited more than 1 to 1. They don't have the risk tools or the philosophy to separate Bitcoin. In other words, the Federal Reserve did not raise any concerns about Bank of New York Mellon's plans to enter certain companies that the Federal Reserve says are too risky and could harm the stability of the financial system. Pay attention to what they do instead of what they say. When banks are having trouble, the Federal Reserve in the government usually steps in and prints money and bills. They will learn the hard way that you can't make more Bitcoin. Just like everyone else, I'm happy that Bitcoin is being used on Wall Street. But I always tell people to be careful and cautiously optimistic about Bitcoin in the current financial system. It is ridiculously profitable and ridiculously exciting to do fractional reserve banking. Have you ever heard the phrase, give me a long enough lever? Well, that's exactly how the world of money works with pressure. You give me your assets, and I lend them out, borrow against them, make swaps, or do other things with the things you've worked hard on to save money for yourself and your family. You don't have to give in to Wall Street's fractional reserve banking scheme if you use Bitcoin. Take back your Bitcoin from sites and exchanges and keep it for yourself. Take care of your own keys. Check that your Bitcoin is real on the blockchain. That's the point. We will not talk to each other again today. This is just Tante Cook with Bitcoin. Have fun building.